Welcome back to the channel. Today we have an emergency portfolio update. It's an emergency because there's been some changes over time that I've not yet discussed and that also I'm struggling. And when I say I'm struggling in real life at the moment. The last week has been utterly brutal. I've still got some kind of an illness that has completely drained all physical energy from me, so that's why I hadn't obviously recorded on Friday. And I figure, you know what, this is a great time to give you guys an update on how my portfolio is actually performing rather than just a week-to-week basis. Let's look at the year-to-date returns and the returns since I started in April 2020. Now, a lot has been discovered in this time. I've made quite a lot of mistakes, but I hope that through failure, I've now improved my investment strategy for the longer term. There are some mistakes I've made, and some of you would argue that I'm still making those mistakes. But that's the beauty of the idea that all of this content is available to you to watch for free. There's no barriers to entry here, and you get to make your own opinion based on what I do. You might argue that my risk management was non-existent. I don't know what risk management means. And I would probably argue the same point at the start. I obviously had invested such a large portion of money into two stocks, which subsequently I have now felt the damage of. That said, I do think there's a balance, and I think there's a balance somewhere between 5 or 6 holdings, and that's where I would see diversification has a greater impact on obviously protection against volatility. If one stock drops, then you've got 5 or 6 other holdings that will keep the portfolio relatively stable. But you've also got the idea that if one of those stocks does really well, your position exposure isn't minimal, so you will see a substantial return from this. And I think realistically, that's what's really dragged up my year-to-date returns. So I'm going to show you here a PDF. This is my investment portfolio. I built a spreadsheet on Excel. Currently, it's not live. But what I plan to do is have this as a going forward future or feature in the portfolio updates. So let's have a look. So at the moment, we've got the left side of the screen here. Excuse me. You can see my current holdings. I have 5 holdings at the moment. I own Boohoo, which is my largest position, in which I hold 21,816 shares. And my holding size is around about £11,431. I own Games Workshop, which is my second largest holding. I have 114 shares, which is currently valued at about nearly £11,000. I also own another UK stock, the London Stock Exchange Group, which I hold 13 shares of, which has a size of about £1,040. And then I own 2 US stocks, starting with Alphabet or Google, which I hold 8 shares of at a current value of about £700. Now this has actually been converted into pounds from dollars, so that's why obviously you'll see this. And also we've got Mastercard here, number of shares of 2. And that has a holding size of about £599.58. You'll see here, obviously, it has been converted because the live share price of Mastercard is about $372, and that's using the most up-to-date GBP to USD conversion, so you'll see there. My cash balance is actually incorrect here because I was trying to set it up to automate it. I'm sitting on around about £215 worth of cash, which is a very small sliver of the overall portfolio. Let's discuss some of the biggest winners and losers because I've not really done this before on the channel. And this is quite a cool little feature that means you can now see at a glance, especially in future videos, hey look, okay, he's talking about this stock, but he's down this much. This is only talking about crystallized winners and losers. So we're not discussing here my biggest uncrystallized loss, which will be Boohoo, which we'll discuss later on. London Stock Exchange Group is on here by error because I had formerly bought and sold shares of London Stock Exchange, taken a small profit, and then re-entered this position earlier in the year. This, therefore, thinks I've got a gain of about £2,000, which is incorrect. Instead, I think I'd gotten somewhere between, I think I held about 13 shares, so the gains can't even be that high because the position size wasn't that high. So let's ignore that. But my biggest winner was the Ashtead Group, or AHT. I sold this on the 7th of October 2021 for a gain of £1,276. This also gave me some dividend income. This, in fact, and I should probably add a percentage here, this was actually a return of about 120% on my position. And quite frankly, I didn't know too much about the business, and that's why I sold out, and it was also quite a frothy valuation when I looked at it. And because I didn't really understand the business, I didn't really know whether to buy or hold more, so I sold. This was when I first started the portfolio. I bought quite a few different shares, hence obviously why this was one of them. We've also got Legal & General, in which I made a small gain of about £110, and this was a relatively small position because this was within the first 3 months of the portfolio. In a kind of sadistic but humorous way, if my second best winning position has been Legal & General and I sold that 3 months into my investment journey, it does obviously say a lot about the portfolio. I'm not going to go through the other winners because they're negligible. Same with the crystallized losers, but there is one there, Argo Blockchain, that I sold on the end of 2021, or the 30th of December 2021, and I took a loss of £3,760. Now this, I believe at the time I sold at 90 pence a share, or 95 pence a share. My average price was about £1.80, so you can see here that I'd pretty much sold at about 90 pence a share, which was exactly a 50% loss. But if you look at the share price now, it would be considerably greater. So I made a poor decision in the first place to buy the stock. I bought something I thought I understood, but didn't. A very risky asset based on a very volatile, speculative currency, and therefore I took the loss for it. But I did find it to be a valuable learning lesson in human emotion and avoiding the fear of missing out. Everyone at the time was so excited about Bitcoin, was excited about what the prospects are. Look how great this company is compared to the other Bitcoin miners. Look at the potential. It's in the UK, but all the US listed Bitcoin miners, look at their valuations. There's potential here. And I fell for that hype. So I took a price penalty of about £3,800. But I hope now, through making these mistakes earlier on and taking on greater risk at a younger age, where I can bounce back, that I'll avoid these in future, or I'll be able to pick it up quicker and, let's say, take a smaller percentage loss overall. That's the goal. And not many people seem to understand this because the average age of my audience is about 35, 40. And so in your position, I'd understand a more detailed approach to the risk management. But because I'm young, this is why I had done so. It doesn't mean I've done well from it, but I do feel that I've learned a lot from it, which has subsequently given me a lot more value at the cost of obviously the capital that I have lost overall in the portfolio. And you'll see here actually, when we go on to this, I'm just going to shuffle over to the right. Hopefully you can see that now. So you can see total returns here, and we're going to go further over. I'll be able to narrate what they are. Total returns in cash, well not in cash, but my overall monetary loss for Boohoo Group is about £14,800. That's quite a high amount, or a 56% loss. They don't pay dividends, so that's what it is. Then we have Games Workshop is actually up by about £1,100, so not quite covering those losses yet, but doing quite well. A percentage return of about 11%, although I've held this for quite some time, and it has bounced back overall, and it's now sitting at about £96 a share. I've also received nearly £600 in dividend income, which is quite great, really, considering I'm not really investing for dividends, and that's really my only dividend payer since purchasing London Stock Exchange Group and Mastercard. And realistically, they're not going to be paying me much because they're so low yielding. Games Workshop is really pushing out dividends, for better or for worse, and you know what? I don't mind. I'm happy to have a little bit of extra cash to reinvest. I quite like it. And then we've got the London Stock Exchange Group, which has gained about £200, and then the US stocks that have gained probably about $100 overall, but we'll come back to that one later. So at the moment, overall, in terms of all of my positions, I'm down about £14,742. This is in fact calculating my crystallized losses that we spoke about earlier on. So this is looking at my total cash deposits minus and what the value of the portfolio is now. So I've lost overall £14,740. Or all time since the start of April 2020, I'm down 36.9%. Which you might go, right, you're awful, Oz, get off, bog off, stop it, right? Fair point, fair comment. Again, you have that freedom to express that you have the freedom to express that view as you wish. You can comment on the video and you can say, look, you're awful, why are you recording? And people do. That's the beauty of it. When we look back about a year ago, this was nearing 60% down. And you'll see this reflected in my year-to-date returns, where I'm up 42%. Now, obviously, this has been because of the recovery in Boohoo from about 35 pence a share to 52 pence a share. That's quite a large gain in a large position of my portfolio, so naturally my year-to-date position looks fantastic, and I don't expect that to be sustainable whatsoever. But it is showing here that my portfolio has shown some value in bouncing back, and it can do better in the future. I think Boohoo can recover, hence why I still hold shares. I'd stopped buying at a point because what I was doing was averaging down on the position without a truly dedicated reason or valuation as to why. Now what I'm going to be doing is waiting for positive results, which I do think will happen. And once those arrive, the shares might be 80 pence a share, but I can average down and chip down on that position a little bit then, and let's say get a better risk valuation on my shares. Because my average is still higher, I can then chuck a little bit down there, but I still need to be mindful of how much overall is invested in Boohoo, hence why it's still an emergency in the portfolio. I haven't added benchmarks as of yet, but I have got some other things which unfortunately the screen doesn't want to show, so I'm going to drag this over here. And you'll see that my total portfolio market value as of right now is £25,252. Obviously, you've got that unrealized gain or loss, which is a different figure to the one before, interestingly. That might just be accounting for all of my current positions. I will double check the formula on that. You've got the exchange rate between GBP to USD. And you've got my chart here of my percentage allocation and diversification of all of my holdings. Boohoo and Games Workshop represent 90% of the portfolio overall. And then the other three holdings represent about 9%. So you've got 91% and 9%. Obviously, over time, I want Boohoo to scale back. I like Games Workshop. I think it should be my largest position because it is my investment with the highest conviction. But I don't think a 45% allocation to this stock is wise either. So what I plan to do is chip away, purchase some more Alphabet, purchase some more Mastercard, which actually isn't on that chart. So there's an inaccuracy there. It's probably a lower overall allocation to Boohoo and Games Workshop. And what I'd like is to have more defensive positions such as Mastercard, which essentially acts as a toll barrier in that it takes money in between payments, obviously to process it through their processing network. This is a good business. This is a kind of company I'm going to hold a 10 to 15% stake in, the same with the London Stock Exchange Group, and have a corner of my portfolio that I know is not going to be going up at a very fast pace, but I know that they're consistent businesses and they're likely going to be around in the long term. That adds some consistency to my portfolio. Alphabet gives me a little bit more hopeful growth potential based on their outlook. They've also got a great moat. It acts as good diversification. I might argue a case for a 10 or 15% holding there. Those three stocks, let's say they all hold 15% of the portfolio, that would then represent 45%. And then maybe I'll add a sixth position with a bit more growth potential and then balance out Boohoo and Games Workshop so that one stock doesn't have a greater allocation than 40%. Now, I'm pretty sure I made a rule a while back, and truth be told, I didn't write this rule down, which is a good lesson to take from this video, and it was, I will not let a stock take over this position of the portfolio or this overall allocation. And I think that number truly should be about 40%, maybe 50%. That's quite extreme. And at that point, you should be looking to cut back, take profits, or you should stop buying shares. Like, just calm down. Hold cash, be realistic, wait for some good prices in other stocks. That'd probably be the best way there. So this has been my emergency stock update. I do appreciate that I'm quite ill. You're probably not a fan of that. This is the best I can offer. As an incentive, because obviously I didn't upload on Friday, I've actually got a free Mastercard stock watch report, one of many to come. I'll link it in the description down below. So if you'd like a 6-page insight on Mastercard, their business model, their competitive advantages, and my stock analysis of MA stock, then I'll leave a link in the description down below. It's completely free to access. Have a fantastic day.